All right, welcome into Market Day Report. I am Scott Schulte, otherwise known as the Cow Guy. Thank you very much for joining us. If that's what you're doing, or if you've been with us all day, it's my job to talk these markets, teach a little, and make you stay. All right, let's take a look and see if we're getting any help from the corn. Let's look and see what that market's doing. It's 1.5 cents lower in that D's contract. 680 3/4 is last. It's in the middle of the day's range, so we can't get too excited about it. 1.25 cents lower in the March. Remember the last time we looked at these, all four of those were unchanged. So we've just dropped about a penny, penny and a quarter across the board. March is down to 686.5, and that too is in the middle of the day's range. Moving over to the soybeans, what do we have happening in the beanies? They've come off a little bit too. 4.5 cents higher in the Nove. That's 1386 3/4. We were pressing 390 on that one earlier. 4 3/4 cents higher in the Jan, right behind it to 1397 3/4. How about the Chicago wheat market? What does Chicago wheat look like? Well, that's down a dime, and it's down a dime pretty much across the board. Deese is trading at 828.5. And that's about 6 cents off the lows. March is trading 10 1/4 cents lower to 847 3/4, and that too is about 6 cents off the lows. So wheat in Chicago trading heavy. How about the hard red wheat in Kansas City? That too is trading heavy. 7.5 cents lower in that D's contract to 924 3/4, about 9 cents off the lows there. March 924.5, 7 1/4 cents lower, and that too is about 9 cents off the lows. All right, let's move over to the spring wheat in Minneapolis, 5.5 cents lower in that front month contract, which is Deese, 945 even as last. That's right in the middle of the day's range. Look at that. March down 5 3/4 cents to 952 1/4. And then finally, let's take a look at cotton. Now we've got 2 months that are limit down. That would be Deese and March. Deese is at 72.11 limit offered, and then we've got March limit offered at 71.81, and that is no bueno. All right, let's bring in Todd Horowitz. He's in Chicago with Bubba Trading. Todd, where does one begin? I'll let you start. How about that?
Scott, here we have markets that are really lacking liquidity. I think the big deal here is there's no liquidity in any market right now. I think there's a lot of election maneuvering here. But you look at, for example, in the equities, Amazon was down 20% last night after earnings. It's down 10% now, yet the markets are screaming higher. This is a typical for markets that lack real liquidity, and that goes through the grains, it goes into the beef. Every single market has no liquidity right now, which makes it much easier, as we call it, the accordion trade. They rip them up and they rip them down. And, this has just been a real challenge to see, but we know fundamentally that grain prices have to be higher. The inputs have gone to Pluto and continue to go higher, yet grains have been relatively steady, up and down for the last couple of weeks.
I mean, you're right, because it's going to cost too much to produce, and then what happens, right? I mean, God forbid I lose weight, and that's the first thing. Number two is that, wasn't meant to be that funny there. I feel like we got a lot of folks scared, and they sold the lows, and now they're scrambling to buy everything back. Does that feel like that to you when it comes to, say, even the equity markets? Because we were talking such doom and gloom, the world's going to end, and I think we got mom and pop flushed, and once we got them flushed, then the market turned around, and now they got to try to buy it back.
Probably, and that is typical. Listen, that's very typical in pretty much all markets too, Scott, right? It happens in the grain markets too for those who trade those markets or whatever. You see this kind of action, and it's, again, the true problem here is the true lack of liquidity to markets, the lack of action, lack of volume, and the lack of real participation. So we'll have to see how it plays out, but it does look like it's kind of like trying to be somewhat stable for about the next six or 7 to 8 days. And I think we'll see. I think we'll see a lot of action after the election.
And that's a good thing for the viewers to learn is that, an old trader once told me, never sell a quiet market. And what he meant by that is, if the market's kind of quiet like these are, your first trade shouldn't be to go short, because then it's going to be hard to find somebody to sell it to you to get out, right? Because there's nothing going on, and you have to. So that's a lot of times, quiet markets will rally just because of that, right?
Well, listen, let's remember one thing. Equity markets are predisposed to go higher because all the funds put their money in, your 401ks, IRAs, all those things automatically go in. So a dull market, it figures it's going to rally. Even if it looks bad, if it's dull and there's no participation and there's no sellers, it's not going lower. If you sell it short, you're going to be chasing your tail to get it back.
I've done that before. All right. Stay right there. We're going to go away. We're going to pay some bills. We're going to come back and talk more with Todd Horowitz. He's in Chicago with Bubba Trading after this. All right, welcome back to Market Day. Let's get through these live cattle prices. I'm the cow guy. Cow guy likes live cattle, all right? Let's take a look at live cattle in Chicago, what the prices are doing there. And we're steady easier, as I would say in the old days, on the floor. 35 cents. Oh, let's go that. 40 cents lower in December. 153.02 is last. That, folks, is only about 12 cents off the lows. So that's trading heavy, live cattle. February is down 40 cents to 156.45, and that, too, is only about 20 cents off the lows. We'll keep an eye on live cattle. That's not acting too well right now. When it comes to feeders, they're a little bit better, but it's still very quiet. Nove's up 20 cents to 178.32, and Jan's up 32 cents to 180.77. And then finally, let's take a look at lean hogs. Lean hogs are higher. Deese is up 82 cents, 85.95, and there we go. We got something up a buck 10 higher in April to 93.22. Let's bring back in the venerable Todd Horowitz. He's with Bubba Trading in Chicago. All right, Todd, have at it. What do you got for us when it comes to livestock?
Well, I think we're in the same situation, the lack of liquidity there as well. But I think, live cattle was up relatively solid earlier, and now it's down. And feeders were lower, and now they're higher. And hogs were higher, and then they came back all the way to unchanged, and now they're back up higher again. This is, I think, the range we're going to be in until we get some real direction on the economy. I think, again, the cattle markets and the hog market will trade basically according to crude. Crude goes a lot higher. I think cattle comes lower, but I don't think there's a huge upside, and I don't think there's huge downside. I think we're, let's say, a $10 band across the board. Pick one, but live cattle is probably a bigger favorite to go a little bit lower from here based on where it's at. I mean, it's only 21 from the all-time highs.
Right. Sounds like you were really kind of just describing my bank account there. Started off higher, now it's lower. How's that sound? All right. Appreciate that. Todd Horowitz, he's with Bubba Trading in Chicago. We're in Nashville, so I can throw this back over to Suzanne.